Hey everybody, it's John King with Summit Funding. It is Friday, the 17th of November. Thank you for joining me for our weekly market update. Lots of things going on this week, lots of things to update you on. Before I dive into the specifics, little teaser here, interest rates have dropped this week, so really good news. I'll dive into that. But first of all, I want to start with a thank you. Thank you to everyone who has supported me, who has followed me, who has shared my content, who has liked and commented. I really appreciate you. This is a journey, and I have been doing everything I can to grow my social media presence, to grow the content that I'm giving to you guys that hopefully is valuable. And I really want to say thank you as we're heading into Thanksgiving next week. That I just don't want to miss this opportunity to show my appreciation, because I really do this first and foremost to teach, because I enjoy teaching people and helping guide people. Hopefully in return, you trust me and that you'll use me to help you with your financing and or tell all your friends and family about me. But I just want to make sure that I'm taking this opportunity to say thank you for supporting me and helping me to grow as I'm continuing to evolve and provide content that you find valuable. So let's dive into some specifics. First thing is actually something we're doing to give back, and that is that we are doing free Pictures with Santa. So if you are in the Sacramento area or willing to drive to the Sacramento area, in my Roseville office on Saturday, December the 9th, time is going to be like late morning to early afternoon. We don't have the times nailed down yet. But on Saturday the 9th, Santa Claus is going to be coming to my office in Roseville. We're going to be taking pictures. We will email you a copy of the pictures. You can use them for your Christmas cards. You can post them on social media, anything you want. So feel free to join us. We'll have cookies and hot chocolate and that kind of stuff. And so we would love to see you and your family to join us on Saturday the 9th for Pictures with Santa. Now, what is going on right now with interest rates? This week has been really good, and it's really, I think, turned a corner. Now, the problem is that we just don't know where rates really are going to go along the way. We do know rates are going to go down. We don't know if they're going to go up any higher before they come down further. But there's a lot of signs that say that we've passed the peak. But let's not forget that exactly a year ago, I was saying the same thing. Exactly a year ago, in October, we hit a peak. November 9th, interest rates started coming down, and they went down through January. And then February, things turned around and rates started moving back up. There's no guarantee that that's going to not be the case this year, but things do feel very different right now. We've been through now almost 2 years of this cycle of inflation and interest rates going up. And October of last year, there were more crises that were causing interest rates to stay high, and we had super high inflation. So October of last year, I won't get into all the economics of it, but we had problems with the value of the dollar and problems economically with issues that were going on in the United Kingdom, where the Prime Minister of UK was making statements saying, "Hey, we're gonna do these things and we're gonna eliminate these taxes," and that actually created more inflationary concerns. And so there's a lot of volatility around the economy, and specifically around inflation and around the economic outlook. Now, right now, inflation has calmed down. And it's calmed down in large part because the Fed has spent all year raising interest rates. And now we're at the point where they really appear to be at the highest end of where interest rates are going to be. We're hopeful that that's what's going to happen, and we're going to see rates start coming down. There's a lot of conversation that says the Fed's going to have to lower interest rates next year, and they're going to do it sooner than what they've told us they're going to. I'm holding my breath. I'm hopeful, but I can't guarantee it. So just make sure you're making your decisions based on your ability to afford what you're paying for today. But ladies and gentlemen, I am really concerned about how people are making their financial decisions today. This is not any kind of judgment that I'm passing on people, but I want to kind of give you a brief thought about the three phases that we've gone through and that we're about to head into. The first phase was inflation happened because we had a huge amount of income coming in because of COVID, because of all the COVID stimulus money that came in, and we were able to spend. Okay, because we had income, we were able to spend it. And we saved a fair amount of it. And so we had huge savings rates over the last couple of years, higher than what we've typically seen. And then that turned around. The stimulus stopped and we started phase two, which is burning through our savings. And burning through the savings can only last so long. And once you burn through the savings, then you go to phase three, which is, I don't want to stop spending money. I like going out to dinner. I like buying the things that I'm buying. I don't have the income coming in anymore that I can spend. I don't have the savings anymore that I can spend. And so we start spending with debt. We start spending with credit card debt. We start spending with home equity loans and lines of credit. And over a certain point, the debt becomes too much because you have to service that debt. You have to make a monthly payment on that debt. And the problem is that monthly payment now starts becoming a bigger and bigger and bigger portion of your income, combined with the fact that you're paying 25 or 30% interest on that debt. And those are the three phases that we're getting to the end of that third phase. And that's where the stimulation of the economy from spending is starting to crack. We're starting to see some slowdowns. We're starting to see some changes. That's why I think things are going to be different in the coming year, and we're going to see interest rates start coming down. Now, don't get your hopes up and say, oh my gosh, that's great, John. When are they going to hit 2.5% again? Maybe never. Maybe never. But we're going to see rates incrementally come down. Right now, we saw rates a month ago at 8.25% to 8.5%. Today, we're pushing closer to 7.25% to 7.5%. That's a 1% drop in interest rates in a 30-day time frame. Now, the next 2 weeks are going to be volatile because all of the tenured people that work in the economy, that work on Wall Street, they're all taking vacation. They're off already. They're taking time with the family for Thanksgiving. They're going to kind of work for the first couple of weeks of December, and then they're taking the last half of December off. So we're going to see a lot of volatility because we got the B team running the show. We got the B team of the newer, less tenured people that they're spending their time not traveling for the holidays, but having to hold down the fort. And they aren't as forward thinking. They're sometimes more reactionary. And so we're going to see spikes and we're going to see quick drops and we're going to see a lot of volatility until the first of the year. So be prepared for volatility. Speaking of being prepared, in the next 2 weeks, we should be getting the numbers for what the conventional loan limit is going to be and what the FHA loan limits are going to be for 2024. Gosh, I can't believe we're literally about a month and a half away from 2024. But we're going to hear what the limits are going to be. That will help as we're looking at purchasing homes using conventional financing instead of using FHA, instead of using jumbo. So if you're over a certain limit, like right now it's 726,000 nationally, we're thinking that number's going closer to 750, maybe higher than that. We won't know. Typically, it's a week after Thanksgiving, and I'll let you know as soon as I get that number. And about a week after that, FHA gives us their number. Conventional loan limits we can use pretty quickly. FHA we can't use until after the first of the year. All right. Speaking of conventional, there is a lot of changes to guidelines happening right now. And I'm not going to bore you with all of the details right now. I'm going to give you a couple of things to think about when it comes to whether you're a consumer looking to buy, whether you're a real estate agent looking to advise your borrowers, your buyers, and your sellers. And that is that there's a lot of tightening of the fringe rules. There's a lot of tightening of tricks that we would use to help somebody qualify for a loan that was kind of a loophole in the guidelines. And they're closing some of those loopholes. And some of them have to do with trust income. Some of them have to do with future projected income. Some of them have to do with rental income. And the biggest one is that one about rental income. And so I'll share with you a little bit in saying that Fannie Mae just came out with a change that is tightening how we treat rental income. It is changing, for example, we used to not care whether you had any rental experience as a landlord or not. And now Fannie Mae says, yeah, we care. So if you haven't been a landlord for at least a year, we may not be looking so favorably on counting your rental income in some circumstances. Lots of different circumstances that apply. It's literally a 5-page document that goes through the different what-if scenarios, but they're paying a lot more attention to try and close some loopholes and try and make sure that, hey, if I'm counting rental income for you, are we really going to think that you're going to continue receiving that rent Do you have the experience and history of being a landlord, and that you're going to successfully maintain that property as a rental property? So just recognize that. Also, really, really good news, some things are expanding. So effective Monday, and you've probably seen an announcement, I talked about this about 3 or 4 weeks ago, but effective Monday, conventional loans, you can buy a 2-unit, 3-unit, or 4-unit property with just 5% down payment. That's right, 5% down if you're going to live in it. Now that's a great house hack. And it's a thing that a lot of people have to be thinking about right now with inflation, with interest rates so high, with house prices where they're at. You've got to think, how can I make this payment and make sure that I can still afford to live? Well, one of the things you can do is you can buy a multifamily property, because now you've got rents coming in from the other units that can help offset your payments and put you in a better position. Another thing I've been talking about a lot recently is pooling together with friends or family to buy a home and put the home in all of your names, or just plan on getting a roommate. Now, the good news about putting a loan in all of your names is now I get to count all of your incomes. If you get a roommate, I can't count your roommate's income, but that's good for situations where, hey, you can afford the monthly payment on paper. But the truth is, you aren't comfortable being stuck with that monthly payment. And also it stops you from living your life. House poor, we've all heard that term. And so this is really an important thought is, hey, if you can afford it on paper, if I say, hey, you can afford a $5,000 payment, you're like, John, you're on crack. There's no way I can afford $5,000 a month. I only want to pay $3,000 a month. Then rent out 2 of your rooms for $1,000 a piece. Now you're paying $3,000 a month and the roommates are paying the other $2,000, but you needed to qualify for the entire $5,000. And as long as you did, that's one way to make it more affordable within your budget. Couple of final updates really, really quickly. We are also expanding some of our products. I got to tell you, I have some mixed emotions about this. I think that we need to find products to help serve the needs of people. The problem is that this is the road we went down in the early 2000s when we were really trying to chase programs just to feed the machine. And back then it was, hey, mortgages can't lose money, and so let's just find more ways to do more mortgages and expand the guidelines. And that created subprime mortgages, and it created some really bad situations. I think we're doing it smarter this time, but I don't think we're really doing it right. I think that as an industry, we're still taking some liberties that we shouldn't be taking. But the reality is there are people that need this type of help, and it's cheaper than the alternatives. So a couple of things that we're coming out with that I'm referring to. We have a no documentation loan to buy a primary residence. Now, you got to have good credit. You've got to have a good down payment. So back in the early 2000s, we were doing, you don't need any proof of income, and you can have a 500 credit score, and you don't need any money for a down payment. So we're doing it right, because to prove no job, you've got to have at least 20% for a down payment, at least a 740 credit score. You have to have at least 2 years of payments in reserves or in savings in the bank. So that's saying, hey, we're kind of doing it right, but here's the truth. We're not proving that you have a job. So you got 2 years worth of payments in the bank. If you don't have any income coming in, at some point that 2 years worth of payments runs out. And if you're paying for other stuff like your car payment and your daycare for your kids, well, then that 2 years of house payments disappears a lot faster than 2 years. So it's good for people who have the income that cannot qualify because they can't prove the income, and we now have great solutions to help them out. Now, they're not cheap. Their interest rates are higher, significantly higher. The fees are higher, but it's way cheaper than the alternative, which is called a hard money loan. So if you're looking for something that's in the middle that says, hey, I need some help, whether it be an investment property, I've got no income required investment property loans, or a primary residence, I've got no income required primary residence loans, but you got to have strong credits and you have to have strong assets, and we can help make it work. But just make sure that you have a game plan. How am I actually going to be able to make this monthly payment? How am I really going to be able to make this work? We've got programs now for foreign nationals, for people who aren't citizens of the United States, have no credit in the United States, Again, got to have decent down payments, have to have some credit reference letters from other countries, but the guidelines are expanding. The final thing, and I am hesitant to say too much about this because I only have this much in details, but we're now starting to finance mobile homes in a park. Yeah, you heard that right. Mobile homes in a park that we are going to be able to finance. I'll give you future details the week after Thanksgiving, but I understand that it's pretty flexible, that interest rates are obviously going to be higher because these aren't truly real estate loans. It's more like car loans or RV loans because you're not actually buying the land and owning the land. And so it's a higher risk loan. And you got to make the mortgage payment on the manufactured home, and you have to pay the rent for the space in the park. But it is an option to have a cheaper monthly payment than a mortgage, less cash out of pocket than you would need to buy a traditional home. And we just launched this program this week, and I will be digesting it over Thanksgiving week, and I'll give you guys more details the week after Thanksgiving. So in conclusion, I just want to wrap up and say thank you again for listening. I will put out a quick update the day before Thanksgiving. We will not have an update the day after Thanksgiving, but just a quick update the day before. And aside from that, just thank you for listening and tuning in. And if you made it this far, I appreciate you listening to the end. Hope you have a wonderful Thanksgiving, and we'll talk to y'all soon. Bye-bye.